Today, Bitcoin closes out the week by crossing above $66,000. Binance founder Changpeng Zhao prepares for his release from prison, and Kristen Smith of the Blockchain Association breaks down crypto's growing influence and politics and the 2024 election. Welcome to CNBC's Crypto World. I'm Jordan Smith. Cryptocurrencies are adding to their recent gains as we close out the week. By noon Eastern, Bitcoin crossed just above the $66,000 level, while Ether ticked upward to $26.84. Solana also on the rise today, inching up to $159. Now, crypto is largely in positive territory in the past week, still riding the Fed's decision to cut rates, plus some positive economic news that was released in recent days. In the past week, both Bitcoin and Ether have gained about 5%, while Solana climbed 8%. That's compared to the S&P, which only gained 0.75% since Monday morning. All right, let's talk about the top stories. Changpeng Zhao, the founder of Binance and the former CEO, is set to be released from prison. A U.S. court handed down a 4-month prison sentence back in April after Zhao pled guilty to enabling money laundering under his leadership at Binance. CZ served out his sentence in California and is originally scheduled to be released on Sunday the 29th, but the Federal Bureau of Prisons rules allow inmates to be released on the preceding weekday if their sentence ends on a weekend or holiday. CZ and Binance have also separately been sued by the SEC and CFTC. He stepped down from his CEO role last November as part of his plea deal and was succeeded by Richard Tang. Next, Republican Senator Cynthia Lummis of Wyoming joined Squawk Box this morning. She discussed crypto legislation just a day after SEC Chair Gary Gensler also joined the show and weighed in on the agency's handling of the crypto industry.
Congress needs to regulate this and weigh in. You know, some of the problem has been that the SEC has said, well, we have all the tools we need to regulate it, but the way they've applied them has brought about court cases. Instead of regulating by making clear rules of the road for the industry, they're regulating by enforcement action.
In yesterday's discussion, Gensler did emphasize that Congress set the SEC up to also be a law enforcement agency. Now, Lummis also expressed doubts that Gensler would lead the agency under the next president.
Gary Gensler's view of trying to keep control of so much about digital assets, characterizing them as securities and all the companies that deal with them as securities, doesn't recognize adequately that Bitcoin's a commodity, Ethereum's a commodity, and perhaps other digital assets are. We need to have a clear definition. The Howey test is available to us, and as it has been updated, there may be other assets just besides Bitcoin and Ethereum that would qualify for the jurisdiction of the Commodity Futures Trading Commission.
All right, let's stick with politics and the 2024 election for our main story. The U.S. is just weeks away from picking the next president, with early voting already underway in some states. And for crypto, the next administration to enter the White House in January could take a very different stance on the industry. I spoke with Kristen Smith, the CEO of the Blockchain Association, about both candidates, how the organization plans to work with whomever wins the White House, and where Congress, the group that actually has to pass the regulations on to the president's desk, stands on the issue. Kristen, thank you so much for being here. We are just about 38 days away until Election Day here in the U.S., and crypto has taken, I would say, a surprisingly starring role in this cycle. I mean, you have Trump, who's made his pro-crypto stances pretty public, and we're starting to hear rumblings from the Kamala Harris side about her crypto views, and this sort of feels like a dream come true for those who have been courting pro-crypto politicians. But what's your take right now on where things stand as we head toward Election Day for crypto?
Well, it's certainly a fascinating time to be working in the crypto industry and be involved in this election cycle. This is certainly an unprecedented level of attention that our issues are getting, but I think there's a reason for that. And the reason is that the crypto voter is real. We're seeing this, across the board in polling, that people really care about crypto policy. The crypto advocate is also real. We have, there's a group, Stand With Crypto, that has 1.5 million advocates that are reaching out to candidates and members of Congress and saying this is important. And I would say also, and maybe most importantly, the crypto industry is mature. This isn't a startup industry anymore that is ignoring Washington. There's been a tremendous amount of investment that's been made to coming up with public policy solutions and doing the level of education that's needed. And so I think it's these three forces that are coming together and really having an impact in this year's election.
to your point that you just made, I mean, every indication that we have is that this is going to be a close election if you look at polling. And I'm curious if you think the crypto voter is going to have a significant impact on the decision in November. If you think there is a significant number of voters that will come out to vote either way, given this issue specifically.
Well, if you look across the battleground states, both at the Senate level and at the presidential level, some of these races are incredibly close. And so you can have a very small number of voters, a couple thousand voters, maybe even a couple hundred voters, that end up determining the outcome of the election. And so a candidate's position on crypto could really ultimately decide some of these elections. And so I think it's incredibly important that anybody who is running for office, whether it be House, Senate, or the president, think thoughtfully about these issues and indicate to that constituency that this is something they care about and they want to find the right way to keep the U.S. competitive and keep the technology growing here in the United States.
If I can ask one more 2024 specific question, there's been reporting that Kamala Harris's team has been meeting with crypto executives and industry leaders. Mm-hmm. And I'm curious if you've had any conversations with the Harris campaign about crypto. Are you hearing anything that makes you feel more comfortable about her policies compared to the Biden administration, which has been seen as more hostile to the industry?
Yeah, no, we have had conversations with the Harris team, and many executives in the industry have also been sitting down with the Harris team. And I think we're certainly encouraged that this could be an opportunity for a reset. We saw this week that she mentioned blockchain technology in her economics club speech that she did in Pittsburgh. She's also been reportedly talking about it in fundraisers. And so I think that's certainly a really good first step. I think what's going to be telling is when we start to get into the details of that policy, right? And I think over time, we're going to start to see more and more kind of concrete ideas come forward. And so I think it's certainly encouraging. There's certainly an opportunity. I don't think we're quite to the place we want to be yet, but it's completely understandable given she was so late in this race to not have, sort of fully fleshed out plans at this stage. So, it's something that a lot of people in the industry are continuing to work on. And, I have hope that because of all the reasons we talked about, the voter, the advocate, the industry, that we can get her there. And we've got a ways to go, but we're off to a good start.
So regardless of what happens in November, there's going to be work to do for the crypto industry if they want to see progress on regulation. And I'm curious what you see as the Blockchain Association's role, regardless of who wins, because, we're talking about a new Congress coming in. We're talking about restarting on some of this legislative work. Where do you see your work starting in 2025?
Yeah, well, I think the Blockchain Association is going to play a critical role in 2025 and beyond, because one of the things that all trade associations do is they work to bring the industry together. And I think getting consensus around the right policy positions is incredibly important, because sometimes you might have, one legislative solution that works for one company, but that doesn't work for every single company out there. And so we as an industry need to capitalize on this moment, right? There's so much investment that is going into the election at the congressional level and the presidential level that once we hit election day, we're not going to be looking at elections anymore. We're going to be looking at moving forward on policy. And so I think it's going to be our job to convene the industry, find consensus around the policies we need, and then go work to do the education and the advocacy needed to get those policies enacted. I think that if we can get legislation done on stablecoins, on market structure, these are pieces that will really cement the U.S. as a leader in this space. And I think it's an important and needed step, and I think it's one that we can get done in the next Congress.
Mm-hmm. Yeah, I mean, I'm curious how optimistic you are about getting some of that progress done, because you're losing one crypto-friendly politician who's made a lot of work happen in regards to those bills. You got Patrick McHenry leaving after this congressional term. Are you optimistic that you have, the allies in Congress come next term to make real movement on those rules that you're talking about?
Yeah, I think there's a pretty deep bench. I mean, Chairman McHenry has been a fantastic champion for the technology and for moving forward on policy. And I think has played an incredibly important role in moving the discussion forward. But there are a lot of folks in the House and Senate in both parties that really want to get this done. And I think particularly compared to where we were 2 years ago, that we have turned a corner. This is not the post FTX world where crypto is a pariah and nobody wants to deal with these issues. I think because of the work of Chairman McHenry and others, all of Congress now realizes that this is something that they need to take seriously. Even some folks who can traditionally been considered opponents, like Maxine Waters was talking very positively about moving forward with crypto regulation. We've even seen Elizabeth Warren, who I think is one of the largest challenges we face as an industry, has started to soften her comments a little bit. And so I think Congress has turned a corner, and that we are going to have the right people in place next year in order to get comprehensive legislation done that'll put the industry on a good course for the next several decades.
All right, that's all for Crypto World this week. We'll be back on Monday, and we'll see you then.
Let's talk about what's going on with Sam Bankman-Fried. In just the past 5 years, Sam Bankman-Fried went from buying his first Bitcoin to becoming a multi-billionaire. The FTX founder is now worth an estimated $11 billion. He could have bought that Jordan jersey if he wanted to. His exchange is now worth $32 billion, and it brought in about $1 billion in revenue just last year. CNBC's Kate Rooney has more on the CEO's rise to the top of the crypto industry. They call him the JP Morgan of crypto, right?
Yeah, the Michael Jordan of crypto, if you will. Sam Bankman-Fried has really played a key role in the crypto industries. Just the role in the industry this year in general, Andrew, he spent hundreds of millions of dollars to bail out struggling companies facing bankruptcy and liquidity issues, you name it. The CEO, though, lives a relatively understated life for a billionaire. He drives a Toyota Corolla to FTX's offices in the Bahamas. He lives with 10 roommates and a golden doodle named Gopher. Sometimes sleeps under his desk on a beanbag chair as well. I sat down with Bankman-Fried outside of FTX's headquarters to talk about his role as the industry's lender of last resort.
We only had a few days to make some of these decisions. What we basically came to believe was the following. The first was that, if possible, it would be extremely valuable to the ecosystem to backstop some of these places. First of all, it's just backstopping customers and making sure they're protected. But second of all, stopping contagion from spreading through the ecosystem, right? Stopping it from being the case that anyone who transitively did business with any chain of people who did business with one of the troubled assets themselves became troubled. And then the secondary goal was maybe there are good trades to do. Maybe there's an investment or acquisition that can be done at, terms that we'd be excited about, given the sort of need for capital right now. But that was usually not the standard we were able to hold ourselves to. In practice, the standard was, do we feel okay about this from a financial perspective? Like, does this look at least mediocre? Like not a huge loss in expectation, maybe a gain in expectation, hopefully, maybe not, was sort of the bar that something had to cross in order for us to feel comfortable, intervening there. And often we just weren't sure. Like, you look at a lot of these cases, they had 4 days before they're going to file bankruptcy. And so we had 4 days to do all of the diligence we could on the company, learn everything about it, understand the industry, their business, their customers, understand how we thought things were going to unfold, and then make a judgment call and wire money. I think the Voyager case is sort of an interesting one there. What we ended up doing was extending a sort of two-piece line of credit. And the first was $70 million. And that $70 million was money they could just draw on immediately, no strings attached. And we knew we might lose that. Then there's a larger line of credit, which would eventually have potentially plugged our best guess at the time as to what the complete hole was, but which had conditions on it. If there's just an immediate run on the bank here and the business is just going belly up and there's nothing we can do to actually save this, like, we don't want to just keep running through it. We very well may lose that $70 million. I don't know if we're seeing it again. and so be it. Like, we understood that risk going in.
Do you still have enough cash if you needed to do another bailout?
Yeah, we did. And we try to keep that on hand. Like, we try not to empty the coffer, so to speak. We had a couple billion going into this. And, it lines up roughly with the amount that we'd raised, over the last year. And, on top of that, we had been profitable.
So billion-ish to deploy?
Yeah, and again, you get to definitional issues here of how much do we really feel comfortable deploying? Saying that there's another ballpark billion, that is sort of, completely unencumbered, certainly will get you within a factor of two, certainly, if the right answer.
You said FTX has a responsibility to seriously consider stepping into the time to save companies. Why did you have that sense of responsibility? It's
not going to be good for anyone long term if we have real pain, if we have real blowouts, and it's not fair to customers, and it's not going to be good for regulation. It's not going to be good for anything, and so. From a longer term perspective, it's just that was what was important for the ecosystem, is what was important for customers, and was what was important for people to be able to operate in the ecosystem without being terrified that unknown unknowns were going to blow them up somehow.
It's too soon to tell, of course, if these crypto bets will pay off. Time will tell. But Bankman-Fried has continued that spending spree, most recently with Skybridge Capital. As far as how they're able to afford all of this, Bankman-Fried says FTX is profitable, has kept costs low with about a tenth the amount of employees as some other exchanges, and the company has raised about $2 billion in venture capital money. For that full 90-minute interview, head over to CNBC Pro on CNBC.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.
Today, Genesis halts withdrawals from its lending platform. Kyle Davies of Three Arrows Capital blames the collapse of the crypto hedge fund on Sam Bankman-Fried. And Crypto World explains how Terra's demise earlier this year ultimately led to FTX's downfall. Welcome to CNBC's Crypto World. I'm Pippa Stevens. Digital currencies are giving up yesterday's gains and then some as the FTX sell-off rages on. By noon Eastern, Bitcoin was down 1.7% to $16,500. Ether fell more, about 3.3% to just above $1,200, and FTX's exchange token, FTT, continues to take a beating, down 20%. The losses come even as Binance's CEO tried to reassure investors, saying today that the crypto industry would be, quote, fine, and that digital currencies have shown, quote, extreme resilience. That's all despite the contagion from FTX continuing to spread to other crypto exchanges, which we'll get to later in the show. Changpeng Zhao, also known as CZ, was speaking at a conference in Abu Dhabi where he officially announced the creation of an industry-wide recovery fund to help the industry through the most recent crisis. Okay, let's talk about the top stories. First up, the crypto lending arm of Genesis just halted withdrawals in the latest sign of contagion for the industry. Genesis Global Capital reported more than $2.8 billion in active loans by the end of its third quarter, and now the company is halting new loans and redemptions, citing the turmoil at FTX. In a statement on Twitter, Genesis said, quote, "We recognize how challenging this past week has been due to the impact of the FTX news. At Genesis, we are entirely focused on doing everything we can to serve our clients and navigate this difficult market environment." Now, according to CoinDesk, the company's interim CEO said Genesis Trading, which is the broker-dealer arm of the business, is capitalized and operated independently from the lending unit. Next, Kyle Davies, the co-founder behind defunct crypto hedge fund Three Arrows Capital, is also speaking out in the wake of crypto's latest crisis, and he's partly blaming Sam Bankman-Fried for 3AC's collapse. In an interview with CNBC this morning, Davies claimed FTX hunted 3AC's positions.
If you recall, one of the biggest critics of us right after our collapse was Sam Bankman-Fried himself of FTX. And we now know, as things are coming out, that he was probably covering up a lot of things on his side. And it's also coming out that he hunted our positions. So I think it's one of those things that in the trueness of time, we will find out the truth, and we're looking forward to justice.
Davies also addressed the hedge fund's bankruptcy proceedings and allegations that he's in hiding to avoid law enforcement.
Well, you have to understand that we're a trading firm, right? So first of all, we're paid to take risk, but for two, we take all kinds of risk. We take gross lever, we take spread risk, we take gross, we take directional risk. And after the Luna collapse, everything just unfolded extremely quickly. Every major position that we had went against us. All spreads, all discounted trades, all directional trades, everything. And that was in part because everyone had on similar positions, but also in part because there was a credit squeeze and everyone had to unwind at the same time. So there's a lot of pain going through the crypto industry.
Last, House lawmakers are calling on SBF to testify in a hearing surrounding what went wrong with FTX. A bipartisan group of House Financial Services Committee members will hold a hearing in December where they plan to grill executives from the crypto exchange, along with Alameda Research, Binance, and others. In a statement, Representative Maxine Waters said, quote, "The fall of FTX has posed tremendous harm to over 1 million users, many of whom were everyday people who invested their hard-earned savings into the FTX cryptocurrency exchange, only to watch it all disappear within a matter of seconds." Unfortunately, this event is just one out of many examples of cryptocurrency platforms that have collapsed just this past year. All right, on to our main story. It has been a wild ride for the crypto industry since FTX confirmed its liquidity crisis last week, with new details emerging every day. So Crypto World took a moment to break down just how FTX's collapse happened, including its ties to Terra's collapse back in May.
The demise of algorithmic stablecoin Terra and its sister token Luna in May of 2022 wreaked havoc on the crypto industry.
Check out this stablecoin. Terra's Luna breaking its one-to-one peg to the dollar, plunging to as low as 26 cents this morning.
What's happening with Terra USD? How is it not a black eye for the entire industry?
It's one of the worst scandals in the history of the crypto industry.
Digital currency prices were decimated, and several businesses were forced to declare bankruptcy as their investments in the failed projects came back to haunt them. But amidst the drama of those days and weeks after Terra's collapse, Sam Bankman-Fried, who founded trading firm Alameda Research in 2017 and crypto exchange FTX in 2019, quickly rose as the savior of the industry. SBF, as he's also known, and his companies poured billions of dollars of liquidity into the space, bailing out businesses like BlockFi and Voyager Digital. As recently as August, SBF told CNBC that FTX had $1 billion in cash to deploy at any given moment.
It's not going to be good for anyone long term if we have real pain, if we have real blowouts, and it's not fair to customers, and it's not going to be good for regulation. It's not going to be good for anything. From a longer term perspective, it's just that was what was important for the ecosystem, is what was important for customers, and was what was important for people to be able to operate in the ecosystem without being terrified that unknown unknowns were going to blow them up somehow.
It seemed like SBF had become the white knight of crypto, the lender of last resort for an entire industry. And for a while, things were looking up. The price of Bitcoin and other cryptocurrencies leveled out, and developers continued to build new projects. But now, nearly 6 months to the day after Terra Luna collapsed, FTX has filed for bankruptcy protection, and Sam Bankman-Fried faces investigations from U.S. regulators and potentially the Department of Justice. So, what went wrong? On November 2nd, a report published by CoinDesk found that Alameda Research, a trading firm launched by SBF to trade thousands of digital assets, was heavily invested in FTX's own token, FTT.
It was a question as to whether or not they were, fully solvent or fully able to continue operations in the way that they have been.
After the report, Binance CEO Changpeng Zhao tweeted that the company would be selling its FTT holdings due to, quote, recent revelations.
Then there was this whole kind of back and forth over Twitter between CZ, who runs Binance, versus SBF. And everybody from the Alameda and FTX side said, there's nothing to see here. We're totally fine. We're completely solvent. No questions asked.
But that didn't last. A short time later, Bankman-Fried tweeted that Binance had reached a deal to acquire FTX, did about a day of due diligence looking through FTX's finances, but Binance reportedly didn't like what it saw and backed out of the deal just a day later. With few options remaining to save the company, on November 11th, FTX filed for bankruptcy protection and Sam Bankman-Fried stepped down as CEO.
It's a blow to the industry that we didn't need right now. And it all started because of a simple tweet that CZ did, because it created a run on the bank and it proved that FTX was actually insolvent, which really is devastating to the industry, which you can now see from the prices across the board.
It turns out FTX didn't have $1 billion to deploy. Instead, it had a gaping hole in its balance sheet. A report from Reuters found that the exchange was transferring billions in customer funds to Alameda Research to shore up the trading firm's business. Sources told Reuters that a large portion of that money disappeared and that top executives had bookkeeping backdoors to prevent some of those transfers from being noticed.
It's likely that they were starting to have issues in June, and maybe they were actually more wrapped up in the Luna and Three Arrows debacle than they let on. And either FTX had a hole because of that, or maybe Alameda had a hole because of that. And one was used to plug the other. That's the only kind of reasonable way that we can assume that something to the tune of $10 billion goes missing.
Those transfers went unnoticed until customers rushed to withdraw funds amid uncertainty over the company's finances.
When you're running in a fractional reserve process, withdrawals are actually the thing that start to pull your lifeblood away.
So after the collapse of one of the most trusted names in crypto, where does the industry go from here?
There's a lot of travesty going on at individuals, families, employees of the place. People put money into the system indirectly and directly. Indirectly meaning there were people who trusted the whole capital markets of crypto. And now they've lost a lot of that trust on the retail side. So indirectly, they've been affected. But I remember Lehman, there were people who put all of their bonuses back into Lehman stock. And then when it happened, it seemed like it happened all overnight. And you have families who lost their life savings. There are similar situations here. And I think those are the people that we should think about and try to support as much as possible.
The first big issue is contagion, when other businesses could go under because of their ties to FTX. The crypto exchange says it has more than 1 million creditors and up to $50 billion in debt. The other issue is making sure something like this doesn't happen again. Some in the crypto space say the industry needs to step up and regulate itself because lawmakers around the world have been slow to enact guidelines. Others say this latest disaster could move regulators to act much, much faster.
I think regulation was coming regardless, and now it will come really, really quickly.
This is a case of unregulated centralized finance running away with it again, committing potentially illegal actions. And so I think if we can take the time to educate lawmakers and regulators on what is decentralized, what is centralized.
Changpeng Zhao, known as CZ, was born in 1977 in Lianyungang, Jiangsu Province, China. His parents were both school teachers in China. His father was a professor who was exiled to rural areas shortly after CZ's birth. In the late 1980s, when he was 12 years old, he immigrated with his family to Canada, settling down in Vancouver, British Columbia. During his teenage years in Canada, CZ helped to support his family by holding down a number of service jobs, including working as a fast food clerk at a McDonald's restaurant and a gas station. CZ attended McGill University in Montreal, Quebec, where he majored in computer science. After graduating from McGill, CZ was selected for an internship in Tokyo, working for a subcontractor of the Tokyo Stock Exchange, developing software for matching trade orders. He later went to work full-time for 4 years at Bloomberg Tradebook, where he was a developer of futures trading software. In 2005, CZ moved to Shanghai to launch his business career, where he established his first technology startup company called Fusion Systems, which was known for some of the fastest automated high-frequency trading platforms and systems for stockbrokers. CZ first heard of Bitcoin in 2013 when playing poker with Bobby Lee, brother of Charlie Lee, who would later go on to found BTCC. Lee advised CZ to put 10% of his money into Bitcoin. CZ instead went all in and sold his apartment in Shanghai and invested all of his wealth in Bitcoin, much to his family's dismay. In 2013, CZ was a member of the team that developed blockchain.info, and he also served as Chief Technology Officer of OKKeycoin. In 2017, CZ founded Binance, a cryptocurrency exchange that would soon become the largest in the world by trading volume. Binance was unique in its approach, offering a wide variety of cryptocurrencies for trading and focusing on maintaining low transaction fees. This strategy quickly attracted a large user base, and Binance grew rapidly. Binance's success catapulted CZ to the forefront of the crypto world. His personal wealth skyrocketed along with the value of Binance Coin, BNB, the native cryptocurrency of the Binance platform. His innovative approach to the crypto exchange model and his commitment to the growth of the crypto ecosystem earned him a respected position in the industry. However, with great success came increased scrutiny. Binance's rapid growth and CZ's outspoken nature made him a prominent figure in the crypto world, attracting the attention of regulators worldwide. This eventually led to